Hi everyone, my name is Busari Abiodun. Welcome to my channel. In this video, I'm going to discuss about stock valuation, which is otherwise known as inventory valuation, under which we are going to look at the meaning of stock, the meaning of stock valuation, the accounting standard that discuss about stock, which is also known as inventory, and we are going to look at the methods of calculating inventory. So let's get started. Inventory or stock. So inventory, which is otherwise known as stock, as defined by IFRS, are goods that are held for sales. If you are talking about goods held for sales, we are talking about all those stocks, inventories that a retail business or a wholesale business have in a store for sale or held for production process. This is in case of a manufacturing companies. The raw materials that are stored in the store, they are all regarded as inventories or finished goods, which are the goods that have been which the production process has been complete. That is, the produced good by the manufacturing company. They are all inventories. So if you are now talking about stock or inventory valuation, as it is referred to by some, it is the amount in which inventories are to be recognized in the book of accounts. Just like we know that the price of goods are not stable, all these stocks or inventories we are talking about, they are purchased at different prices. So by the time the business want to supply it, at what cost are they going to recognize these inventories? That's what this topic is talking about. So if you are talking about the accounting standard that discuss about inventory is IAS 2, that is International Accounting Standard 2. Now, what are the methods of calculating inventories? There are different methods of calculating inventories, but the most common one among them are the three which I'm going to discuss about. The first one is first in, first out, which is called Fifo. The second one is last in, first out, which is called Lifo, while the third one is weighted average. We are going to take this method one after the order. Let's start with the first one, which is first in, first out. If we are talking about first in, first out, this simply means that the stocks or inventories that are stored first should be the first to be supplied out of the store. That is, the first inventories that are received in the store will be the first one that will be supplied. Let's take an example under that. Abiodun deals with the sales of bags. On the 1st of May, he bought 10 bags at 2,000 per bag. By the 7th of May, the price of bag has increased to 2,500 and he ordered for 7 bags. On the 15th of May, a customer requested for 12 bags from Abiodun. Using Fifo method, calculate the cost price of 12 bags. So let's take the information. The 1st of May, 10 bags at 2,000 per bag. On the 7th of May, we have 7 bags at 2,500 per bag. What is supplied, that is on the 15th of May, he is to supply 12 bags. So how are we going to calculate this? Using the FIFO method. Just like I said, FIFO means first in, first out. If you are talking about the stock of inventories in the store this time around, it means the first stock that was received is the one that came in on the 1st of May, which means the items that came in on the 1st of May will be the first to be supplied. If we look at this one, they have 10 inventories, which means all the 10 inventories will be supplied. And they have to supply 12 inventories, which is not up to the 10. So that is 10 bags at 2,000 naira will be supplied. If 10 bags is supplied at 2,000 naira, it remains 2 bags. So that will be 2 plus. So the remaining 2 bags will be taken from the end inventories that are received on the 7th of May. So that will be plus 2 bags at 2,500 naira. So that will make up the 12 bags that are requested for. So which means, so 10 bags times, that will be 10 times 2,000 naira plus 2 times 2,500 naira. 10 times 2,000 naira, that will be 20,000 naira plus 2 times 2,500 naira, that will be 5,000 naira. 20,000 naira plus 5,000 naira, that is going to give us 25,000 naira. Which means, using first in, first out, the cost of the 12 bags is going to be 25,000 naira. That is what the FIFO method is talking about. So now let's take the Lifo method, which is last in, first out. Under this method, so this method is the opposite of Fifo, which means the last item that came into the store should be the first to be moved out of the store. So let's take the example. Using the same example of Abiodun Limited, on the 1st of May, he bought 10 bags at 2,000 naira per bag. By 7th of May, the price of bag has increased to 2,500 and he ordered for 7 bags. On the 15th of May, he is to supply 12 bags out of the store. Using Lifo method, we are to calculate the cost of the 12 bags. So let's take note as usual. On the 1st of May, 10 bags at 2,000 naira. On the 7th of May, 7 bags at 2,500 naira. So he wants to supply 12 bags. So using Lifo method, the last item that came to the store is the one that came in on the 7th of May. That means that item will be the first to be supplied out of the store, which means the 7 bags will be supplied out of the store. So that will be 7 bags at 2,500 naira. If we remove 7 from 12, it means it remains 5 bags. So the remaining 5 bags will be taken from the inventory that came before that, which is the one that came in on the 1st of May. So that is going to be 5 bags plus 5 bags at 2,000 naira. So 7 times 2,500 plus 5 times 2,000 naira. So 7 times 2,500, that is going to give us 17,500. 5 times 2,000 naira, that is going to give us 10,000 naira. So 17,500 plus 10,000 naira, that is going to be 27,500. Which means under the Lifo method, that is the last thing first out, the cost of the 12 bags is going to be 27,500. Now let's take the last method, which is the weighted average. Under this method, it means at each period that the firm want to supply goods out, they are going to calculate the average stock at that period, and that average stock will be used to multiply the number of the items to determine the total of the cost of inventory. So let's take the same example. Abiodun deals with the sales of bags. On the 1st of May 2021, he bought 10 bags at 2,000 per bag. By 7th May, the price of bag has increased and he purchased 7 bags. On the 15th of May, a customer requested for 12 bags from Abiodun. Using weighted average, you have to calculate the cost of 12 bags. So let's take our note as usual. 1st of May, 10 bags at 2,000 naira. 7th of May, 7 bags at 2,500 naira. And this time around, he want to supply 12 bags. If you are talking about weighted average, it means as at the 1st of May, if you are talking about the average cost at the 1st of May, that will be 2,000 naira. So as at 7th of May, if you are talking about average cost, that means we are going to find the total cost on the 1st of May. We add it to the total cost on the 7th of May. We now divide everything by the total quantity. That is going to give us the average cost. That is 1st of May, cost of 10 bags. Cost of 10 bags at 2,000 per bag. That is going to give us 10 times 2,000 naira. So 10 times 2,000 naira, that will be 20,000 naira. That is the total cost of 10 bags as at 1st of May, where the average cost is 2,000 naira. So the next one, on the 7th of May, we have 7 bags at 2,500 naira. That is 7th of May. Cost of 7 bags at 2,500. That will be 7 times 2,500. 7 times 2,500. If we multiply 7 by 2,500, that is going to give us 70,500. That is the cost of 7 bags as at 7th of May. Now, what is the total cost of this? All the stock that are in the store. That will be the total stock. The total is going to be the total cost of the inventory on the 1st of May plus the total cost of inventory on the 7th of May. So the total cost is going to be 20,000 naira plus 17,500 naira. If we add the two together, that is going to be 37,500 naira, which means at the 7th of May, the total inventories in the store is 37,500 naira. Now, what is the average cost? That is, what is the cost of each of the per one? If you are talking about the cost of per one, that means we need to know the number of quantities that are in the store, and that is going to be total quantity. That is going to be 10 plus 7. That is the 10 bags that I received on the 1st of May and the 7 bags that I received on the 7th of May. And that is going to give us 17. That is the total quantity. Now, if we're talking about average cost, the average cost is going to be total cost divided by total quantity. That is, the average cost is going to be 37,500 divided by 17. If we divide that 7,500 by 17, it's going to give us 2,206. That means using the average cost, the cost of one bag is going to be 2,206. This is the amount in which the bag will be supplied out. So now the cost of 12 bags will now be 12 times 2,206. If we multiply 12 by 2,206, it is going to give us 26,647. That is going to be the total cost of the 12 bags that are to be supplied out using the weighted average method. That is the short illustration about the 3 methods we are talking about. That is the first in, first out, the last in, first out, and the weighted average. So in the next video, we will be taking all these methods one after the other and take a full illustration. So looking at the illustration we are having on the screen, that will be taken in the next video. We are going to use Fifo method to calculate the inventory and prepare the ledger account for the inventory. So thank you very much for watching the video. Don't forget to subscribe to the channel, like the video, and share it with others. You can also visit my blog for more details about this topic. Until the next lesson we'll be meeting, I said bye for now.